from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, earnings blitz, Disney and Airbnb reporting after the bell. We'll walk through the results, and I will sit down with the CEOs, Bob Chapek and Brian Chesky. Plus, Bumble's Whitney Wolfe Herd joins us. The dating app surprises with a big revenue beat, but conservative outlook for online dating post-pandemic. Shares hit an all-time low. And now hiring with urgency. Amazon puts out the help wanted sign for 75,000 workers, offering sign-up bonuses and boosting minimum wage. And another crazy day in crypto. Binance facing scrutiny from U.S. authorities, and Elon Musk doing a 180 on accepting Bitcoin for Tesla, citing concerns about just how much energy mining consumes. We're going to have reaction to that and earnings with Coinbase COO Emily Choi. I will be speaking with Emily Choi coming up in just about 10 minutes. And at the bottom of the hour, Bumble's Whitney Wolfe Herd joining me. And later, I'll speak to Disney CEO Bob Chapek. And next hour, Airbnb's Brian Chesky. So keep it right here on Bloomberg. To the markets we go first, where stocks climbed and investors focused on earnings results. Bloomberg's Kriti Gupta has the latest on both. Kriti?
Well, Emily, green on the screen for the S&P 500, but if you actually look at the tech sector, a little bit of a mixed picture. The NASDAQ 100, the semiconductors index, that SOX index, doing really well today, really rebounding from 3 sessions of selling. Big tech, however, not joining in on that trade, and they were actually leading the charge earlier in the session before kind of pulling back, and now you're seeing them in the red, 0.7% down on the day. I want to show you what this looks like on year-to-date basis, though, because if you actually look at the NASDAQ 100 and the New York FANG index, you can really see those big tech companies have been far more volatile, far bigger swings than the NASDAQ 100. Really crucial because some of those ETFs track the NASDAQ 100 over the New York FANG index. So that's the macro. Let me dive into the micro here, because we did see a little bit of a reemergence of some retail bids, some of those retail favorites hitting session highs today all at once. So it really tells you that there was a little bit of that action. If you just look at shares of AMC, for example, or GameStop or COS, let's start with AMC. The caption, by the way, coming from my colleague Bailey Lipschultz, really seeing that spike right around 2 o'clock. Pretty violent, pretty strong, kind of makes someone think, are those Reddit traders back in the game? And while we're sticking with micro, let's just go back to some of those earnings stories, because we did get a slew of earnings. Disney under pressure after hours, those second quarter subscribers coming in at 103.6 million. Less than the estimate of about 110 million, Emily. Then you have some upside surprise with Airbnb on their earnings. Beat analyst estimates on their booking rebound. Looks like not enough to keep the stock higher. I'm going to go to that second one right there. Coinbase shares, they were initially falling. Those revenues were falling short of Wall Street estimates. It's interesting, though, that you're seeing those shares rebound in after hours trading up 2.4%. And lastly, to the very bottom, we have DoorDash coming in, beating sales estimates and boosting their outlook. Looks like those restaurants, that reopening trade, very much helping those DoorDash shares.
All right, Kriti, we're going to be covering all those companies over the course of the hour. Thanks so much for the roundup. Sticking with earnings, getting some reaction to Airbnb and DoorDash in particular. We've got Tom White of D.A. Davidson with us. So, Tom, Airbnb shares down after hours, DoorDash shares way up. Let's start there. What's happening?
Yeah, look, first off, thanks for having me, Emily. Look, I think both prints were strong. Both outlooks from the company were strong. There are a few kind of puts and takes here or there in the outlook. You've got Airbnb maybe under a little bit of pressure. I think that's maybe more a reflection of the fact that, that stock hadn't come in as much here over the last 3 months as some of the other names in kind of high multiple, high flying tech. DoorDash is a good example of that. That stock's been a little bit weaker than Airbnb. Expectations probably a little bit lower. And therefore, I think you're seeing that stock maybe react a little bit better here aftermarket.
That said, Airbnb gross bookings now more than $10 billion and actually still higher than pre-pandemic levels, which I thought was quite surprising. I mean, what are the risks you see ahead for Airbnb if there is a travel rebound? Why would investors be skeptical?
Yeah, look, I don't know that there's any huge glaring risks. I think, one of the things that really stands out when you look at the numbers tonight was the strength in ADRs, or average daily rates, basically the price that hosts are charging for rooms. That was a big part of the top line beat versus consensus. I think ADRs were up 35% year over year. And in the letter, they talk a little bit about how that's probably not going to be sustainable, that type of ADR growth, that there's a sort of supply demand imbalance a bit in the marketplace. So, I think, if you think about what drove the beat for Airbnb tonight, if it was mostly ADR, if that's really not sort of a sustainable driver, maybe the top line beat looks a little bit less impressive. But still, I don't want to say that's nitpicking because it's a meaningful thing, but this was still a very solid quarter from Airbnb, and the outlook was strong too. They talked about April being stronger than March, so that's always a good sign heading into the second quarter.
Meantime, when it comes to DoorDash, you've got kind of the opposite story, where coming out of a pandemic, you might expect people to order less food online. However, we've all got these new habits, so certainly we will be ordering it more perhaps than we did before the pandemic. That said, competition is stiff in the food delivery market. How do you see DoorDash weathering, competitors doubling down?
Yeah, look, I think, for me, what stands out from the DoorDash results and the outlook was the guidance for the second quarter. The top line trends, they expect those to be better sequentially. So better than the first quarter. There's been a lot of debate and questions about, once comps get tough for these online food delivery platforms, what will the growth profile look like? And DoorDash here is guiding to sequential improvement in revenue, which is good. There's still this kind of looming question about, what happens as we get farther and farther into this kind of recovery and reopening, and you're going to get a resetting of the unit economics for these online delivery businesses. I think it's notable on the full year EBITDA outlook, they took up the high end of the range. They've been guiding to 0 to 200 million in EBITDA. They're now guiding to 0 to 300 million. But they still kind of are baking in a little bit of conservatism, a little bit of uncertainty with that kind of low end of the range at sort of break even EBITDA. So, near term, it seems like the top line trends are strong, but there's still some questions, I think, as to exactly kind of when things normalize a bit, what does this business look like in the back half of this year?
Any concerns about regulation, given some of the changes we're seeing to the gig economy and what we don't know about the stance the Biden administration will take there?
Yeah, certainly. So, in the online food delivery space and kind of the gig driver space, the last few weeks, labor classification has been kind of the hot topic again. You've had the labor secretary making some comments, making investors nervous. It's unclear to us what the labor secretary or the labor department could do kind of unilaterally to sort of compel, reclassification of drivers. I don't think that's happening anytime soon. But, this administration is going to, I think, just put more focus on that issue, put more pressure on the gig companies. I think another regulatory issue facing DoorDash and the delivery side of Uber's business is, all these restaurant commission caps that we've seen crop up over the course of the pandemic. A lot of cities, particularly even New York here near where I live, there's leadership calling for those commission caps to go permanent. So I think kind of that part of the regulatory side of things for the delivery space could kind of continue to heat up, just as labor classification kind of continues to simmer along as well.
All right. Tom White, D.A. Davidson, always good to have you here, Tom. Thanks for your insights there. I will be speaking to Airbnb co-founder and CEO Brian Chesky about the latest results in the next hour, so keep it right here on Bloomberg. And meantime, coming up, Coinbase sliding after reporting its first earnings with revenue just shy of estimates, but the exchange turning better than expected profit and seeing a huge rise in trading volume. President and COO Emily Choi joins us to talk about the crypto volatility and Elon Musk's Bitcoin about face. This is Bloomberg. Coinbase out with its first earnings report since its blockbuster market debut in April. While revenue is just shy of estimates, the exchange seeing increases across the board in verified users and massive increases in trading volume. Shares now rising, in fact, after hours. I caught up with Coinbase President and COO Emily Choi earlier to get her key takeaways from the report and where she thinks crypto is heading from here.
The crypto economy is taking off, and that Coinbase as a platform is taking advantage of that opportunity. It's just really cool to see this wave of activity, not only from retail users, but also from institutions. We haven't seen it in these types of droves before. And what I think you're seeing here is that there's just a lot more credibility in this space. We have really, really high quality institutions who want to participate, who see the opportunity, and who are jumping on board.
Now, you've been a public company for a few weeks now, huge debut, but there's been a lot of volatility, yes, in the crypto space in general since then, but also in Coinbase shares. What's it been like being a public company, and what do you make of that volatility?
Welcome to crypto. It's a feature, not a bug in many ways, I think. And we were operating as a public company internally for so long. We're so used to this. We're looking at the long term. And so these blips, they don't faze us. And that's how you have to look at it as an employee or an investor. You're looking at the long-term opportunity and you kind of buckle up and go for it.
You're not providing much financial guidance. Why is that? And do you foresee a time when you might provide more guidance?
It goes exactly to your last question, Emily. It's about, this is a new nascent technology shift, much in the same way that the internet took a foothold and kind of changed people's lives fundamentally. And so with those tectonic technology shifts, you're going to see volatility. And so for us, we're not going to play that whole game of short-term quarterly management. It's just not the game we're playing. We're playing a long-term game. I can't foresee us doing the whole guidance thing because I think we just think that this whole industry and our company have such an incredible opportunity, and that we're not going to think about it in that kind of a quarterly way. We're going to think about it as a long-term game.
You cite the market uncertainty as part of the reason for limited guidance. What are the biggest question marks for you when you look at the market ahead?
It's about, how do we create the most user-friendly experiences for folks? I mean, in many ways, I always kind of say the analogy of like the old mobile phones, right? That like had these clunky interfaces. We're in kind of that phase of crypto. So we have to make it more usable. We have to make it more accessible. We have to have more regulatory certainty for certain folks to get off the sidelines and participate. But we are seeing so much participation now, we feel like there's just a great opportunity ahead of us.
Elon Musk just abruptly announced that Tesla will stop accepting Bitcoin as a form of payment. Crypto markets losing hundreds of millions of dollars just on the back of that tweet. What's your take on that? Is there something wrong with that picture?
There's so many misconceptions, I think, about the space. And I think there's something like 75% plus of miners are actually using renewable energy right now to mine. I welcome Elon and brilliant minds like him kind of seeding these dialogues, because I think it helps us drive forward more and more sustainable innovation. You're seeing right now, we're moving from a proof of work to a proof of stake type of mechanism. That's something like ETH2 and others are using. And when they do that, that's a way that we're driving more renewable energy. But in any case, I just want to say, like, I do think that there are a lot of other industries and devices that consume a lot more energy than Bitcoin. And so you have to put things into perspective, like Christmas lights and dryers and game consoles. So put things in perspective, but we want to have these dialogues and we want Elon to participate. I wouldn't be surprised if there's something bigger behind that.
That's interesting. Certainly we'll have to see. He was also just on SNL talking about Dogecoin, saying that it's a hustle. Unclear whether he was joking or whether he was serious. Either way, Doge market's reacting to that. Coinbase doesn't carry Doge on its platform. Are you at all reconsidering that? And why don't you carry Doge at this point?
We have a process where we list assets according to a framework that we've kind of pioneered called the digital asset listing process. And we look at a variety of different attributes of these different assets to make sure that we feel comfortable putting them on the platform. including security, including does it have a network, a bunch of different features. And then we score those assets and then we add them based on a bunch of those factors. We obviously see the demand for Doge. It's like, I think it was like one of the top questions we got even from investors for this quarterly earnings. And so you can imagine there's a world where it's top of mind for us and we'll have to add it. But you know, we're the Amazon of crypto assets. And so we're a platform, we're asset agnostic, and we're going to add as many of them as we can to the platform as quickly as we can. It's a huge focus for the company.
Meantime, you know, obviously Bitcoin, Ether, Doge still way up on the year. When you look at the market, do you see an overheated market? Or do you see bubbles within the market?
We don't look at it that way. We look at just, we want to use these periods to kind of, you know, really just think about the long term. So we say, okay, there's a bunch of assets that are taking off. There's a bunch of features that are taking off. We want to use this momentum to continue to invest in the business. And what's funny is even when the crypto markets are way down, we still look at it that way. You'll see in the shareholder letter that we've published that we talk about how we did a major acquisition, Zappo, during a time when the market was very, very down. And it was an unintuitive move for us to make. And it helps cement our place as the leading crypto custodian in the world. So it's like, we truly, the way that we operate is you can't kind of get too hyped up or too sad during the bad times, because we believe in this kind of generational company that we're building. And then over the longer term, it's just going to keep going up and up.
Bloomberg is reporting that the DOJ and the IRS are asking for more information from Binance, which is another crypto exchange. You've got the SEC looking into which coins are coins and which aren't coins. What are you expecting from the new SEC and this regulatory environment? Do you expect to see some changes ahead?
Our foundation was built on a heritage of regulatory compliance, leaning in with regulators. Again, a very unintuitive move to have made when our founders co-founded the company. And because of that, we have a front door to these types of relationships. We have ongoing dialogues with the regulators to kind of think about that right mix of how do we make sure we're always protecting the customer and being on the side of the customer first and foremost. And also at the same time, making sure that we're pushing innovation forward and we're not kind of unconsciously stifling anything that could be the next big technology frontier. So for us, you know, we view regulatory as something, as a competitive advantage for Coinbase, and it's something that we'll continue to invest in. We think that regulators understand the opportunity here, and we're going to work with them to kind of craft out what looks right.
Meantime, of course, Coinbase is the dominant crypto exchange, but there's new competition, it seems like, every week. Block.one just announced a new exchange, $10 billion in liquidity. There's the DeFi movement. There's traditional banks. There's PayPal, Robinhood, trying to offer the services that you offer. How do you stay ahead of the competition? Does that involve changing up your fees potentially going forward?
We look at ourselves as the best of all worlds. So if you think about the traditional financial world, those folks are going to be fantastic at traditional financial mechanisms. They are not going to be amazing at being on the kind of crypto forward spectrum of pushing innovation forward. And in many cases, we will be able to power many of their crypto experiences. We can partner with them. On the crypto forward frontier, if you think about, you know, the Binances and others of the world, they are launching features and adding assets like nobody's business. But because they are on the kind of bleeding edge of crypto, they don't have those fiat to crypto bridges that we enable. So we think that we offer folks the ability to get into crypto and then to stay in crypto.
Coinbase President and COO Emily Choi there. You can catch the full interview at Bloomberg.com. Coming up, Amazon's Alexa is expanding in the auto sector. Details on tech's deepening ties with Ford next. And as we head to break, take a look at Bitcoin, which tumbled below 50,000. This is in part due to Elon Musk's serious U-turn decision to quit accepting the cryptocurrency as payment for Tesla electric cars. However, he did just tweet, to be clear, I strongly believe in crypto, but it can't drive a massive increase in fossil fuel use, especially coal. We'll have more on this later. This is Bloomberg. Amazon is deepening its ties with Ford. The company has agreed on a 6-year deal that'll integrate the digital assistant Alexa into the entertainment system of F-150 trucks and other models. Alexa will roll out to about 700,000 Ford vehicles this year. Let's bring in Bloomberg's Matt Day, who of course covers Amazon for us. Matt, what else can you tell us about this?
This is one of the biggest deals, probably the biggest deal Amazon's ever struck on the road. Tech companies of all sorts are trying to get their voice assistants in the dashboard. And Amazon has inked one that has, Alexa right there in it. You don't have to fiddle with the smartphone or push to talk. It's just, native Alexa integration. Say, hey, Alexa, find me a gas station. And as long as you link your Amazon account, it's supposed to work.
So, how successful do you expect this rollout to be? I mean, obviously, we've been expecting tech to come to cars for a long time, and it hasn't really yet delivered.
Yeah, it's a struggle. Consumers want to use what they're familiar with. They don't have to learn anything else to get into the car. And that's one thing this deal is trying to take advantage of, right? There are plenty of ways folks could already access Alexa in a wide range of vehicles, but most of them was kind of complicated. In a lot of cases, there wasn't a whole lot of usefulness. And by making this kind of a more organic experience in the entertainment system, Amazon and Ford are hoping that people kind of take them up on it.
Meantime, Amazon hiring an additional 75,000 logistics workers. Talk to us about how this compares to prior seasonal hires, the hiring that they did in the midst of the pandemic. What do we know?
Yeah, so the last year during the pandemic, they hired about 500,000 people. This is definitely a sign, to us that the pace of demand from homebound shoppers isn't going away, even as, certain major markets for them reopen, people go back out into the world and presumably shop in person. They still think they're going to need a whole lot of folks to pack and pick items, and that's what this 75,000 represents. It also might be a way for them to kind of get up on a tightening labor market and kind of announce their intentions early and see if they can get some press and get some more applications from folks.
All right, putting out a big help wanted sign. Thank you, Bloomberg's Matt Day there with that report on Amazon. Now, coming up, Bumble out with a big beat, but shares falling below the IPO price for the first time, hitting a record low. We're going to speak to founder and CEO Whitney Wolfe Herd next about how her outlook on online dating post-pandemic will evolve. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get a quick recap on the markets with our Ed Ludlow in San Francisco. Ed, you zeroed in on Bitcoin and, of course, a fresh tweet from Elon Musk.
Yeah, he's saying, I strongly believe in crypto, but it cannot drive a massive increase in fossil fuel use. Come with me straight into my Bloomberg terminal. It has been a roller coaster ride for the cryptocurrency over the last 24 hours. It all started on that yellow circle when Elon Musk tweeted that Tesla would suspend the use of Bitcoin as a means of payment for its vehicles. Remember, back in the last quarter, it disclosed not only that as a company it had invested in Bitcoin, but that it would accept Bitcoin as payment for its cars. You can see Bitcoin then falls down to $46,000. We pared some of those losses back, but then in the last hour, he seems to be walking back his support, saying, yes, I do believe in cryptocurrencies. We have this fantastic bar chart that puts this into context. If you flip up the boards, there is as much energy being used to mine Bitcoin as there is being used by entire countries. But here's the thing. If you look at that video on your screen and the chart that Elon Musk is tweeting about, the mission statement of Tesla has always been to advance the transition to sustainable energy. He's the head of a company that does solar and energy storage. So why is this a surprise to him? Is it a question of they just didn't check, him and CFO Zachary Kirkhorn? Or is this about some short-term jump that we've seen in the amount of energy that's being used to mine Bitcoin? He's certainly going to be put a lot of questions, Emily, but I don't think, unless he tweets more, we're going to get a lot of answers.
All right, Ed Ludlow, always looking for more answers when it comes to Elon Musk. Thank you, Ed, for that report. Meantime, dating company Bumble beating big on revenue, turning a profit for the very first time, but shares tumbling below the IPO price also for the first time, in part due to a cautious outlook about the future of online dating post-pandemic. The app, which gives women the first move, is actively finding new ways to keep users engaged online and offline. Joining us now to discuss, Bumble founder and CEO Whitney Wolfe Herd. Whitney, thank you so much for joining us. Always good to have you. So many huge milestones this quarter. Revenue, profit, paying users, almost every measure. Let's start there. What were the key drivers?
Yeah, so we're really proud of the team. We drove great results this quarter. The drivers are our continuous investment in product, marketing, brand, safety. We saw a lot of re-engagement. We saw a lot of new subscribers. So everything across the board is really looking good. We're very proud of the foundation of this business. We're seeing early signs of pent-up demand and this reemergence into the real life dating. But what's exciting is even in those markets where real life dating is reemerging, we are still seeing a surge in video. And so that suggests that people have really leaned into this digital first way of meeting, even regardless of quarantines lifting and so on and so forth. So we're seeing people meet first digitally, check each other out through video, make sure they want to meet that person, save themselves time, and then they go out into the real world. And so we are seeing really great signs of this pent-up demand, and we're very, very excited about the future.
And yet investors seem concerned about the outlook. I know you said that you're being conservative there, but why be conservative when you are seeing this much momentum? And what does online dating look like post-pandemic?
So, we are not here to predict what happens with this virus around the world. You're seeing still very dire circumstances in places like India and Brazil, and we don't feel it's appropriate for us to be the judge of what happens next. Do new variants spread and what happens from there? And so even though we fundamentally have proven that even in a pandemic, our numbers are great, we keep customers engaged, and we are ultimately, to some degree, the only way to meet during circumstances like a quarantine, we're very excited about the reopening opportunity. In these areas of reopening, we're seeing great re-engagement rates, which suggest that people that switched off dating during quarantine are now coming back, and they're coming back and using the product a lot. We're also seeing great engagement on BFF, which just should suggest that people are ready to get out there and have community. They want friends and community to go do the things they love with. And so, there's a lot of great trends here, but again, it is not our job to predict when this pandemic ends, and we want to be conservative in that nature. But as we've said before, we really feel that we benefit as we come out of this, and say this pandemic does continue on for this foreseeable future. We hope that's not the case. We do believe that we also serve a great purpose then as well.
Some interesting trends you're seeing on the platform, a steady number of users revealing that they are in fact vaccinated. Are you also seeing vaccine hesitancy? Can you talk to us about some of the behaviors you're pulling out?
So I can't go into any further behavioral insights than what we disclosed on our earnings. But what we are seeing is this willingness to get back out there in person. We've launched these new badges in the app that allow you to be very particular about what your level of comfort is during this pandemic. Are you willing to take a walk in the park? Are you only willing to do that with distance or with a mask? And so it's been really interesting to see what people's level of comfort is through this. And what's been even more exciting is watching people build these full-fledged relationships without even meeting in person. So in these kind of dark quarantines, there were people that built full relationships and now are starting to spend time in person together. And that's really fascinating to see. And we're really, really confident that even if the virus does continue, that we serve this great purpose. People need to meet each other. We've talked about this before. Nothing can hold people back from the sheer need to find love and friendship. And so this is something that is not just a matter of circumstances. This is a true need.
User growth up 30%. What demographics are you seeing mostly? I know we've talked about, more folks of an older generation. Can you break down who these new users are and where they're coming from?
So the interesting thing about Bumble is these customers are all across the map. So we've got great engagement and new customer growth with Gen Z, millennials, but also Gen X and boomers. You know, there's been a whole new wave of people looking for second chances, going through divorces or breakups. The pandemic has not just been the quest for love, it's also been this new beginning opportunity. And so we're really seeing people come from across the map. And what's interesting about Bumble, contrary to a lot of social media, not everyone sees everyone. And so if you have a young woman in college using Bumble, her mother joining is not a issue for that college student, where it might be on a social media platform, because people really see the age groups they're searching for. And this is a huge focus of ours, is really leaning into these segments and catering a curated experience, both from a product and marketing standpoint, and doubling down on our efforts for these different markets, so that we're not just the app for millennials or for X. This is a brand and a product that speaks to everyone. And that's something that's very unique to us.
You've invested a lot to grow your international business. How much fruit is that bearing at this point?
Yeah, international has been a tremendous highlight for us. Germany is growing extremely rapidly. It's actually rapidly becoming our third largest market. We are seeing this resonate in all different cultures, communities, across languages. It just suggests that the Bumble mission, the Bumble brand, the Bumble product, this is not only needed and wanted everywhere, but it's working. Women across the globe want to be treated with respect. Women across the globe want to be in the driver's seat of their connection. They do not want to be inundated with messages. They do not want to be bombarded or treated poorly online. And that has been Bumble's driving force from day one. And this is resonating in a real and profound way. And when you think about our global growth opportunity, it's massive. The TAM is so large, and we're just at the very early beginning of our international growth. So this is a playbook we're investing heavily in and rolling out across the globe.
All right, well, we'll be watching that. Bumble founder and CEO Whitney Wolfe-Herd, always good to have you here. Thanks so much for stopping by. All right, coming up, SPAC king Chamath Palihapitiya is doing just fine, even as the SPAC bubble starts to deflate. We're going to have that story next. This is Bloomberg. Billionaire Chamath Palihapitiya is one of the biggest cheerleaders and beneficiaries of an insane market bubble, and the SPAC king, or so he's called, has a 100% can't-miss investment for you that will most definitely pay off for himself. Bloomberg Businessweek's Zeke Falk pens a fascinating profile in this week's magazine. He joins us now. Zeke, I've interviewed Chamath many times over the years. He was always brazen, he was always controversial, but he has taken that to another level in the last couple of years. Tell us more about what surprised you, what you found out about him in your reporting.
Yeah, I mean, if you're watching this, you probably know Chamath. I feel like he's one of those one-name people now. Maybe you've seen him call out other venture capitalists as hypocrites, or say that Facebook, where he made his fortune, was ruining society. But in recent months, he's been promoting SPACs. And he sort of said that these are a way for regular people to get in on the kind of private tech deals that made him rich. He's made a big point of saying he's out for the little guy, his interests are aligned with theirs, and he's even gone so far as to almost say this is like a solution for income inequality, that he's bringing these great investments to the people. So I set out to look into some of his SPACs and see if his interests really were aligned with the people he said they were aligned with.
So let's talk about that, Zeke. We actually have a quote from an interview with Chamath here talking about SPACs. Let's take a listen.
I think that SPACs are very much here to stay. Back in the, using the language of inequality, it evens the playing field. It democratizes access to high growth companies. How? Because it allows retail and it allows long tail institutional investors, folks that may not have necessarily been tier one hedge funds. Now they can also play.
Zeke, you looked into one of Chamath's SPACs in particular, and that is Clover Health. What did you discover there?
So he pitched Clover Health as this amazing tech company that was going to disrupt healthcare. But just looking even a little bit beneath the surface, it's a small money-losing insurance company in New Jersey, operates almost exclusively in New Jersey, that has recently developed a tech product for doctors, but has really yet to see that result in profits. It seems to me like a pretty risky play. But the way that Chamath set up the deal, as with all SPACs, as you know, the sponsor is getting a 20% promote, which means 20% of the stock in the SPAC goes to him for setting up the deal. So even though he also put some of his own money in, he is set up to profit basically no matter what happens to the stock. And in the case of Clover, the stock has crashed after an expose by a short seller, Hindenburg Research, and Chamath and his partners have still basically doubled their money.
So are you saying then that Chamath's interests are not aligned with the interests of the investors that he's giving advice to?
He would make more money if the stock went up. So in that case, in that sense, they are aligned. But when somebody says that they've got this deal, you should be grateful for bringing them this special deal, I'm just always very skeptical. And it seems to me that his interest is in doing more deals, promoting deals at high values so that he can attract more companies to his SPAC platform, and that investors should be skeptical that he's really offering them the chance to make the kind of crazy profits that for sure he has made in the past on some of his really good investment picks.
So what are you expecting the sort of next iteration of Chamath to be? You know, he announced a possible run for governor if Gavin Newsom got recalled here in California, then abruptly pulled out. What's next?
Well, if Chamath follows his pattern, in about 2 years, he's going to be telling everybody what jerks all the SPAC sponsors were and how they were all out for themselves. But, I mean, in all seriousness, he's got another SPAC going right now. He's supposed to be taking Equinox Holdings public. And I think it'll be a test to see if he can really keep this going while still having some of his deals be misfires. Because for a while, it seemed like if you just gave your money to Chamath, you were going to make a lot of money. And I don't know if his deals will have such appeal if they're not seen as a sure thing like they were earlier this year.
And when you look at some of the other investments he's made across the board, do you see other places, other investments, other deals that raise your eyebrows?
Recently, he's gotten into a site called BitClout, which is sort of like a social media platform where you can buy coins tied to people's personalities. It doesn't make very much sense to me. It seems like it would be, I'd be very shy to send them my money. But on BitClout, the Chamath coin is, last I checked, the third most valuable. And he's just been promoting this as that he invested in, and he's been talking it up. I'll be curious to see what he does next too.
I think we all are. Zeke Fox, Bloomberg Business Week. Great piece. Check it out in the latest edition of the magazine. All right, coming up, Disney shares tumbling after hours after the company reported second quarter Disney Plus subscribers fell short of expectations. We're going to talk about that, parks reopening, and the road ahead with Disney CEO Bob Chapek himself. He is next, joining us from Burbank. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to welcome all our audience members on Bloomberg Television and Bloomberg Radio. Disney's second quarter earnings beat on revenue and earnings per share, but Disney Plus subscribers fell short of expectations. We're going to talk about it all right now with Disney CEO Bob Chapek joining me from Burbank. So Bob, it was a huge quarter for you. You reopened Disneyland finally. But I want to start on Disney Plus. Investors focusing in on this subscriber miss. What happened there?
Well, we met the expectations that we've set out for ourselves to hit the 230 to 260 million households that we guided to back in December. So far, this first 2 quarters of the year, we've added 30 million households to our Disney Plus subscriber base. So we're happy with where we ended up, and we think that we have a great road paved all the way to the guidance that we gave back in December.
So your Star International streaming service has been rolling out abroad. Curious how much that broadens the market for you and how many new signups you saw to Disney Plus as a result of that.
Well, our sign-up growth continues both domestically and internationally. And I have to say that we've now launched in a number of markets, I think 59 markets across the world, and we've not been disappointed yet in terms of the uptake of subscribers in each of those markets that we've grown. We've executed a little bit differently in each piece of the world, depending on what content rights we have and what the particular needs of the consumers and whether we have sports rights in those particular markets. But regardless of that diversity of how we've gone to market, we've been absolutely thrilled, both across our general entertainment platforms, which is the Star Plus platform, as well, our Star platform, as well as our Disney Plus platform. So very, very happy with it and the uptake across all markets.
Now, you ran the parks for many years, and we're hearing so much talk about a huge summer surge, a roaring 20s-like surge. How big a surge in summer demand are you expecting to see?
Well, we are really encouraged by what we're seeing in terms of not only current attendance, but forward bookings. And again, today with the CDC's guidance in terms of the relaxation of the mask requirement, we think it's again going to be a big catalyst for growth and actually being able to put the number of people in our parks that we're more accustomed to. So it's very, very positive. Our future bookings are looking really great. In Walt Disney World, in fact, they're already back up to fiscal year 19 levels, which is, of course, pre-pandemic. And that would be the greatest barometer of all, is that, at least in terms of the assurance that Disney's built up with their guests, that we're going to be able to operate responsibly and provide those magical experiences. They're thrilled to come back. There's a craving. I saw this on Main Street at Disneyland when we just recently opened up. There's a craving, not only for our guests, but our cast to come back and be part of this sort of social experience, to experience that magic with your friends and family. And so we're just glad to be able to bring people back to work and please our guests at the same time.
So, of course, as you mentioned, this big news from the CDC, but of course, we're still waiting for children to be vaccinated. Will you start letting employees go mask-free in the park, or, customers in general?
We're still digesting the guidance that was just given a few hours ago, but we think that's in the future for us, in the near future, in fact. And I think it's going to make for a much more comfortable experience this summer in the heat and humidity of Walt Disney World in Orlando.
Let's talk about Florida because, Florida has lifted all restrictions, and I'm curious how far away you are from 100% capacity there, and will you get to 100% before the end of the summer?
Well, as you know, there's a variety of guidance that we've taken since this pandemic started. We have national guidance from the CDC, health officials from the state, the governor of the state, local mayors, and everybody sort of comes to what seemingly is the same realization now over the last couple of weeks, that it's safe to reopen. It's people don't need to wear masks. Social distancing requirements are literally evaporating right before our eyes. And I think that gives us the ability to, create that community, that sense of community in our parks and bring back some of the experiences that unfortunately we've had to put a hold on, like the parades and fireworks and meet and greets with our characters. And that's really part of the big Disney experience. And we're just thrilled that the CDC has come to this point, given the increase in vaccinations, the decline in case rates, and just the general sense that people are now willing to travel. And we see that consumer confidence in our research growing, whether it's a willingness to jump on a plane, but mostly to be able to come back to a Disney park and feel comfortable doing it.
Meantime, a new agreement with the MLB, 30 regular season games instead of 90, but the games will be simulcast on ESPN and ESPN Plus, as I understand it. Does this mean you're paying less, and does this speak to your focus and commitment to the bottom line quickly?
Well, what I will say is that the deal that we struck with the MLB is reflective of the great value that we're getting in terms of our ability to take higher profile games, more postseason games, the entire wild card series, and bring it to our guests across a variety of Disney platforms. And we've done it in a way that is very accretive to our shareholder value.
Bob Chapek, CEO of Disney, thanks so much for joining us, and to our Bloomberg TV and radio audiences. That does it for this edition of Bloomberg Technology. But stick around. I'm going to be speaking to Airbnb co-founder and CEO Brian Chesky in the next hour. This is Bloomberg.